Oh, guys, the cryptocurrency landscape is on the verge of a seismic shift, and it's not driven by some meme coins or some other flashy NFTs, but by some fundamental protocols and tokens that are really revolutionizing the world of finance. Welcome back to the channel. Thank you for joining me. Subscribe, drop a comment, and let's really get down to business. In the early days around 2020, I actually seen some of the potential of Uniswap, and that was really to revolutionize trading and actually trigger a significant bull run. But as we know of now, 2020, those engaged with the tokenless protocol Uniswap were rewarded with the Uni airdrop, marking the first significant crypto airdrop. Now, Uniswap has become an essential building block of DeFi, considered to be a DeFi 1.0 protocol. Interestingly, over the past month, the subset of crypto tokens has been experiencing a fascinating trend. Looking at Uniswap token price charts, we see surge from nearly $4 on June the 11th to a staggering 5.5 by the June 25th, which is 36% increase in less than a month. Now, this bullish trend isn't exclusive to Uniswap. Essentially, all of DeFi 1.0 is following somewhat of the same trajectory. For example, Synthetic Network within the same time frame jumped from around 1.75 to 2.25, which is a 28% increase. Compound escalated from $25 to $53, then that's a pump of around 112% in less than a month. Finally, we have DeFi 1.0 protocol called Aave, AAVE, which soared from a low of $50 to around maximum 75, which is a gain of 50%. Pretty big. Clearly, something extraordinary is really happening, and a narrative is gaining momentum. Real protocols in crypto and those that are transforming the world of finance are set to explode once the markets fully recover. To really understand all of this, we need to really grasp the basic flows in crypto. Money flows from fiat or stablecoins into Bitcoin, then from Bitcoin into large caps like Ethereum. From there, it flows into mid to low cap coins, and finally, it flows back into Bitcoin or bypasses Bitcoin to return to fiat or stablecoins. But this is really a simplified view, and the money flow in crypto is much more complex. Now, with other flows occurring simultaneously, that is. Today, I'm going to introduce you to some more DeFi money flow. Okay, now the DeFi money flow, we start with fiat or stablecoins. Now, since DeFi is primarily built on Ethereum, money bypasses Bitcoin and flows right into Ethereum. Now, after Ethereum experiences a pump or some of the money flows out of Ethereum into DeFi protocols, the major building blocks of Ethereum like Uniswap, Synthetics, Aave, or Compound, we're going to witness this phenomenon. From Ethereum charts, we can see that Ethereum experienced a significant pump first on the 20th of June. After Ethereum's pump, money went into DeFi 1.0 coins, and they all experienced their pumps 4 days after Ethereum on the 24th of June. So what's the next pump after DeFi 1.0? Well, you might have guessed it, DeFi 2.0, the next generation DeFi protocols. Now, for the remainder of this, I'm going to focus my favorite 2.0 coins and why I believe to see some bullish movement rather soon. Let's start with the blue chip of DeFi 2.0, one that has been given some obscurity to become a top 100 crypto, even amongst the bear market. And if you're wondering what it is called GMX. If you're unfamiliar with GMX, it is a fully decentralized perpetual exchange built on Ethereum Layer 2 Arbitrum and another chain, Avalanche. Now, this allows users to enjoy low fees even during the market mania. You can go long, you can go short, up to 50x leverage without really relying on a centralized source. Now, they offer this for 5 different assets. That's like Chainlink, Bitcoin, Uniswap, Ethereum, and AVAX. Now, the beauty of GMX is that all the trading fees from the exchange go to the token holders of the protocol. As their website says, 30% of the fees go to the GMX stakers, 70% of the fees go to the liquidity providers of the protocol, the GLP stakers. Now, this chart is going to show the popularity power of GMX, and it shows the average daily earnings of derivative protocols since the start of the year. Now, as you can see, GMX is dominating the sector with an average of 18.5 million in fees for the protocol each day, distributed to the token holders, that is. Now, GMX is outperforming Gains Network which is generating around $9.6 million in fees. GMX is even outperforming DeFi 1.0 all-stars like Synthetics and DYDX, which are actually experiencing negative fees. Now, projects like that prosper during a bear market, and are likely to explode during a bull market. Now, GMX does fit in this bill exactly, and during the bull market, GMX is set to launch something special, GMX version 2, which includes synthetics. Now, this means any asset can be leveraged on the platform, and last month, GMX Twitter accounts announced that the launch of the public testnet for version 2. And they're diving into the testnet, and we can see many more assets are being added to the platform, including BNB, Doge, Solana, and some more. Now, once the version 2 of GMX goes live, pretty much any crypto token, stock, or commodity can be traded on GMX, and the public testnet will be running for over a month by then. And we can expect the mainnet launch to happen sometime later this year, and when it does, anticipate remarkable things for the protocol. A self-reinforcing loop is about to take place. Now, more markets on GMX lead to more trading volume, which leads to higher fees, resulting in higher APR for the stakers. Of course, the APRs attract more stakers and LPs, which will turn attract more traders, leading to more markets and even more trading volume, which is great, right? Now, so what's going to be built on 2.0 of GMX? And why am I really bullish on it? Well, Krypton on Twitter has a great thread that explains all of it. They tweeted earlier this month about GMX ecosystem, which has been on fire a lot lately, and is about to get even hotter with the introduction of the version 2 and GM alongside the already profitable GLP strategies. Now, they introduced a new yield farming protocol called Archie Finance, and Archie is a composable leverage yield farming protocol designed to enable users to use leverage to boost their APYs. Now, this is integrated with GMX, and users can get up to 10x leverage and use it across GMX. Now, they're seeing a safe APY in the form of providing liquidity, and Archie offers this as a passive income and low-risk option. But for those with a bit of risk-taking in them, Archie does offer leverage with high rewards, but requires some active risk management. Being integrated with GMX, Archie Finance does optimize their yield farming strategies to get the most out of the GLP and the GMX ecosystem. Now, they did announce the GMX version 2, otherwise known as GMX Synthetics, and lucky for us, Archie already has a strategy based around them for Archie version 2. Now, Archie is one of the pioneers in leverage yield farming, and that's a new innovation in DeFi. And looking at DEX Screener, we can actually see that it has a modest market cap around 2.8 million, and the token is actually rebounding after their initial launch dump. But what's the value of Archie tokens? Well, according to Archie Docs, under Vote Locked Archie, LRC, depositing Archie results in a 1-to-1 distribution of LRC, and all of the platform earnings are actually distributed based on the proportion of Archie deposited. Essentially, 100% of the platform goes to the Archie lockers or the stakers. Let me know what you think. Check out Archie. Check out GMX, and let me know your opinions in the comments below. And if you haven't already, subscribe, drop a comment, and click that bell icon. I will see you guys in the near future.